as always, we're just going to go ahead and start with our trend journal that I do every day. Um, we actually ended up back above the 21-day moving average on the 8th. And so now we are still in an uptrend. We are on day 6. We have had 3 in a row kind of downside reversal stress test days, and stocks aren't really holding up to how they should for their stress test. Um, we had Nasdaq lows outpace highs by 4 to 1. So there was, I actually have it pulled up on my other screen, 49 52-week highs versus 139 52-week lows made today on the Nasdaq. And so I track that pretty much every day to get a sense of market breadth to see how healthy the market is other than just your mega tech stocks, because that's going to show you what the market's really looking to do. And so some of the stocks that did really, really well today was AMD, Nvidia. You had some cannabis stocks do well today. DWAC had a random pump just on some news, which kind of I was expecting. And then some stuff that got destroyed that were starting to hold up is like SMCI. It was holding up really, really well. It got destroyed today. Small caps in general, IWM, they kind of got smacked. Plug hit 52-week lows today, which was interesting because it was looking okay. Blink, I think, hit 52-week lows. So a lot of stocks hit 52-week lows. And then things like the airlines that we were talking about that were setting up decent airlines and EVs, they kind of rolled over, and like Neo hit 52-week lows as well. And so a lot of stuff did kind of roll over, which is not really what we want to see, but it's kind of what I've been expecting with we're being this much extended. We had 2 days below the 21-day moving average. We haven't really had a full pullback yet. So, or consolidation. So we're on about 3 weeks worth of consolidation right now. I'm going to go ahead and change it to my chart. And so we'll go start with a weekly chart of the SPY, which it's looking okay on the weekly. There's nothing quite wrong with it yet. And so there's no reason to short here, in my opinion. It still hasn't broken its all-time highs. So that's one thing that it's like, okay, it still could possibly come up there before even seeing anything lower. We've had one, two, three, four. We're on our fifth week of fairly tight action of just kind of being in this little range right here from 167, 166-ish to, or 467, 466 to 479 roughly. So we are in somewhat of a small range, which is what we want to see. We want to see this 10-week moving average. That's what this purple one right here is. We want to see this 10-week moving average kind of coming up to it instead of a huge heavy pullback down to the 10-week moving average. Similar to this, that's when you actually see the most kind of push to the upside. So it will be very interesting to see how that runs. We do have seasonality kind of running out of favor for short term. We have February is coming to be, it's a weak month. So in the top 6 months of Nasdaq are between November, December, January, February, March, April. And then sometimes they add in May and June, but those ones aren't as much. But the top 6 months are from November to April, essentially. And February tends to be a weaker month, but it also tends to be a good buying opportunity. And so that's one thing that we're going to be looking for. I'm looking for specifically to see that the S&P 500 close this monthly candle above this 472.80. And that's just because that's the open of the month. And if we do close below it, yeah, then that's going to be a little not as good for our January barometer. It'll mean that we have closed red for the month. And we're looking to close green for the month for our January barometer. We already got the first 5 days, and then if we get the January barometer, that's again another confluence of being bullish for the rest of the year. That's saying that if we do pull back, it is most likely going to be a buying opportunity. Similar with the QQQs, I'm pretty sure pretty much everybody's talking about it. We're sitting at all-time highs. We haven't really had a good displacement above it, but we're consolidating here. We are kind of closing near highs, or not near highs. We're closing at the middle of the days, the last few days. So the last few days have been really, really tight. We have nothing this week. The week of the 15th, 16th, we have nothing this week, but it does have January expiration. It has been up. The week of January expiration has been up 11 of the last 13 years since 2021. So that is fairly more of a bullish thought that it could be neutral or bullish. Just up doesn't necessarily mean up heavy. And so that's one thing that I'm looking for is to see maybe that we could hold off on that. For Nasdaq, I'm really again we're looking to hold these 10-day moving averages or 10-week moving averages. It's a little further down. Okay, so the 10 weeks right here. So it bounced off of it pretty heavy. It came right up to it. And so if we continue to hold here, that'd be good for the rest of the month. But then if we kind of go sideways for February, that could be a good buying opportunity for March and April. One thing I've been looking at too is we are starting to get, this is the 2-year, 30-year. We are starting to get this 2-year, 30-year, let me get it off a logarithmic scale, is starting to pull back again. And whenever this happens, whenever we see a flattening of the yield curve, from what I've noticed, we tend to have more downside movements in the market. And so if you go back ever since pretty much this, pretty much since inception, if you just do, and I've talked about this kind of a bit before, not in these specific streams, but I've been, excuse me, I've been very, very vocal and and like about this and talked about this. You kind of just see a pullback in the Nasdaq or in S&P 500. See, when you see a pullback in the 2-year and like a flattening of the yield curve, you see more downside risk in the market. So that is something that I am keeping in mind. I'm not trading with it necessarily. I'm trading the price action of whatever asset I'm trading, but I am keeping it in mind that we do have somewhat of a downside move on these yields on this flattening curves, and that could bring more pressure to the market. This does look like it's starting to do more of a stage four. So in a stage analysis sense, we have stage one accumulation, stage two markup, stage three distribution, stage four decline. So we have one, two, three, and if we start pulling back here, this could be a stage four. So we could be entering a stage four once we get heavy below this flattening level 0.00, which we're actually just about to. So once we really start getting there and it starts flattening out, that could really kind of, if the market wants to pull back more, that could definitely be a good catalyst to help it. Some other things that I was looking at as well that I've been talking about heavily is DXY with this 200 EMA. And as I have marked here already, we seem to bounce here very often whenever we come down to it. And so I've been using these two kind of these little other pullbacks right here as guides of how I'm looking at this. So it's like all of these are looking very similar to there. And this is kind of exactly what I've been looking for. We have, and I've been talking about this level, this 104.25 level. And I think we might be working our way up towards it now. And if not, and if we don't hold there and like start pulling back there, then we could really start seeing it come up to these other highs. This could essentially be considered a weak high at that point, because then it'd be a structure shift. It'd be a new high. And so this could be considered a weak high at that point, and we'd be looking to target this 107 level. But we'll look there once we get to this 104.20 level, which I really think we are starting that move because it's right at this 200 EMA. We just finally broke out. It was actually last night. Because if you look on a 4-hour chart, let me clean this up a little bit. I was using not this wick. I've been using this little resistance for a 4-hour chart, and we broke above it last night, and we've just been kind of zooming. And now if we can pull back and hold this 4-hour EMA here, this is the first time we have gotten above it since November of 2023. So if we can hold above this, similar to, and I've been using these models here, similar to here, where we break above it and pull back down, hold it, and then continue higher. This is a really good model here where it just went sideways for a long time. The moving average flattened out. We broke above, we pulled right back, held there, and then we continue higher. That was May 23. That was perfect. So this is exactly kind of what I'm looking for. Same here. We broke above it. It started in rising. We retested it and then coming up higher. So I'm looking for DXY to do something similar to this. This is a heavy breakout that it's had. It's above this trend line here. So now it's starting, and so like DXY, this was a high that created this low. We're now above that high, so we're starting to create higher highs here. So I want to see a pullback and I want to see a pullback hold. Ideally, I want to see these levels hold, but the real level, like invalidation would be after this 100, but that's again, that's really more heavier. I really want to see these levels hold right here, this 102. And with DXY, we've also been watching the yen and we've been fucking killing the yen over the last 3 weeks, pretty much since down here. And for a while now, I've been talking that, let me clear up these EMAs, clear up this chart as well. And it's really nice, actually. I like trading the yen because it's a natural hedge to NASDAQ. So, like, if you're on a bullish NASDAQ day in a downtrend and you're still trading the yen and you're still like short from the night before, it's already kind of a hedge to itself. So, I do that a lot for that reason. And the yen kind of moves very similar to NASDAQ in a sense of Forex because a lot of your other Forex pairs, like the euro, I don't really like trading euro. I think it's a little too slow. I'm not a huge fan of gold. It kind of manipulates too much and ranges too much. And so I tend to get drawn to this USD JPY. For a weekly, it's a similar thing. I was looking on kind of mid December, end of December, saying this looks like it's starting to slow down, and I was mentioning it right around this doji candle day or week, and then it bounced really, really well, and now we're starting to get our buy signals on my trend EMAs as well, and so that's what I use for the trend template that I show every day. And so these are just very basic. That way you don't have to, when you're looking at it, it gives you a daily bias without, and it's a pretty much instant daily bias. You know that, okay, if you're above a 10 MA, if you're above a 21 MA, if you're above a 50 MA, you're on a long bias. Your bias is to go up. And so that's what we are right now. We are finally getting above this 50 MA on the daily chart. Don't always keep that one on. I usually just keep on the 10 and 21. So, but we are finally above the 50 MA, which is a buy signal for me. And so 50 MA right here, finally got above it, but we did retest it. So we could come down, still test this 146 level, but I do think at minimum we are at least going to take out this high, which I'll show in a 4-hour chart. One thing I've been watching is the last year, so January of 2023, this exact similar time and similar pattern. I'll just take off all of these. You have this same kind of style where we came down, we broke this trend line from November. We had a heavy push and then we were continuing higher. So like going into February, you see like end of January we came up and then we had a heavy push coming into February. So I'm kind of starting to see, I'm wondering to see if February, since it's a weaker month in NASDAQ, is that going to be seasonally a stronger month in the yen? And so we've seen, and I went back through it, and I've seen mixed results right here. End of January starts to get heavier. February does well, but then it kind of fizzled out and went sideways. So I'm not going to go through a bunch of different years, but I have done some back testing. It's not fully good. The yen doesn't have great seasonality from what I've been researching. It's more, its main seasonality is actually October. Is October doing well, which is interesting to me because that's a weaker month for the Nasdaq as well. So the yen is another one that I've been really, really watching, and I think that if when you look on a 4-hour chart, I definitely don't think that it's finished. I think it's that gonna come minimum up to here, like if it once it breaks these highs, like Fancy's talking about long shorting, which is fine, because once it comes above these highs, you could definitely start seeing a consolidation again and a retest of down here, this 146.47. So that's a clean break. Get a retest there. That's a great entries, and then look to come up because we have a ton of equal highs throughout this whole section. Equal highs here, here, equal highs here, and then you have weekly equal highs up at this level here. And if we really start shifting, this could be a weekly shift of structure for this being a weak high. I'm not looking that far into it. I definitely want to get past these highs first, and I just play it like level by level usually. A lot of times I'll look on a weekly chart. Okay, what are the highs and lows on a weekly? And the real highs and lows on a weekly is this high and this low. And so I'm going to be basing it off of there. And then the highs and lows on the daily, which are both of these. These are really good swing highs and swing lows. And so I'm more bullish on the yen than I am on Nasdaq. I like the yen. But I'll show some of the stocks today that just got absolutely destroyed. SMCI was looking good. It was kind of flagging, and now it's just kind of pulled back on heavy displacement. MSOS, and it was up today, and it was up heavy, but it pulled back and actually ended up midpoint on the day. But at one point, it was almost down on the day. It was only down 3%. It went from up 11% to down 3%. You have a ton of just Neo broke the hell down at its since lowest levels since 2020 on Neo. Plug, same thing, lowest levels since 2020. So you're seeing like these small caps, and let's look at oops, IWM. I don't know. I think it has to do with a lot with Tesla too, because Tesla's not doing well. And I've been mentioning this, like one thing that we want to do as traders is we want to find leaders. We want to find where, then that's why I go over the leading sectors every single week with us. And so we want to find the leaders. And at one point, I looked at my sector list right here today, and not a single, the only ETFs that were green was VIX. And so like we know that tan, that's a really heavy, like today we had VIX, MJ, which is cannabis, which usually is a pump and dump. And then some XLK was barely green, sports betting was barely green, and VIX was up fucking trim huge. And VIX is putting in this wonderful base. And it could get rejected from here again. It's kind of forming this little trend line here. It didn't really respect it, but it is there, and it's forming higher lows. VIX is forming higher lows, which could make for a breakout up to this 1650-ish level. I don't know why I have such a big level zone, but it's probably off of a weekly chart. SMH was barely up today. It just filled its gap from uh from AMD. AMD was up massive today. Yeah, it was sick. Glacier called Neo yesterday. He said that Neo was going to under $7 and it happened today. That was wonderful. And he did get into GLD shorts, which I like. I was looking at GDX myself just because this is a little faster than GLD and because GDX is the miners, so it's a smaller cap, so it might run a little faster. So you could easily see a 10% move on this a lot faster. And then some that are actually really breaking down that are in stage 4 downtrends in my opinion are these solar stocks. These solar stocks are all pretty much in stage four downtrends. You got JKS, you broke down from this huge level, came up, type 1 reacted, type 2 reacted. Now we're coming back to this 25 level bare minimum, and that's a weak low, so we'll probably come down even higher, even harder, somewhere around this 20 to 23 level. Um, JKS end phase, that's another one. Have this heavy breakdown, stage three breakdown, came back up, took rated these highs, which is a little better than JKS. It rated those highs, and now this is probably gonna come get taken as well. DQ, very similar. Actually, this is way worse. It didn't even come up. There's your stage four breakdown. Boom, stage three distribution, stage four breakdown, and now it's starting. It's gonna start coming to these lows. So it's when it's in a stage one, you're coming. It's gonna be consolidation. Stage twos, you're looking for it to hit highs. Stage three, consolidation. Stage four, you're looking to hit lows. And that's kind of how I look for like a lot of my take profits. If it's in a downtrend, I'm looking for it to take out lows. If it's in an uptrend, I'm looking for it to take out highs. I learned that a lot from watching Casper and listening to his streams that he does here at Playbit. And one of the exciting kind of things that we did see today was Save here, Spirit Airlines at its lowest level. A fucking it was at one point today, it was at a 60% down move, and then it bounced 35% off its highs. I almost got fucking longs there actually for a lotto. That would have been funny. But it hit all-time lows. It had a what was it? The judge, they was supposed to get an acquisition from, I think it was JetBlue, and the judge said no, that's an antitrust. They won't do it. And so as soon as that hit, it just went insane to the downside. So I actually had save calls. I was selling save calls and save puts. I had a strangle on it last week, and I closed it on Friday. No, I think I closed it on Friday. Or sometime last week I ended up closing it, and I was super happy that I closed it. I saw this today. I was like, oh my gosh, if I wouldn't have closed it, if I would have been greedy, I would have been so screwed and had to get assigned shares of of this stock. So really happy that we closed our strangle on this. We made our 50% profit. That's our goal for whenever we run our strangles, straddles. Straddles, I'm really only looking for 30% profits, but whenever I'm running strangles, iron condors, I'm looking for 50% profits. If you get assigned shares, what would you do though? Sell calls. Sell $12.50 calls. What do you get assigned for? Let me look. Hold on. I could probably get this. Wouldn't that shit liquidate you if it drops too? Cause it's on margin, right? Technically. No, because I mean, if you're just paying for 100 shares, so if you get assigned, if I would have held it, and if I would have held it till Friday, I would have just gotten assigned at like $12.50 minus the amount of premium that I get paid, which was like $3. So it really would have only been you're really only getting assigned shares at like $9. Sell $12.50 calls because you have 100 shares. They're considered cover calls. So sell $12.50 calls, and if it goes up to 12.50, you make you make essentially zero, but you make your money back and you sell the shares without having within a profit, and then if it doesn't come back, you get paid. Sorry, my daughters were being loud. I had them to go in the other room. Let me see what they're at right now. Save. Damn, its IV actually went down a ton too, which is weird. So yeah, you sell. Wow. $12.50 calls are only worth fucking 40 cents right now. That's trash. Definitely got to research strangles more. Yeah, it's all I can. I'll do a thing about them and definitely help out anybody that needs help with them. It's very, very nice to have. One second. Um, some of the stuff that's also just like not doing well and starting to look like it might be loading into stage fours are these China stocks. It kind of has this like flag type of look that might actually break down instead of out. So we'll see how that looks. The volume looks very good, which is a problem to me because I really like the volume. You see all these crazy buy spikes, which is wonderful, but it's not, the price action is not there, and that's why we really focus on the price action over the volume and everything else. And so yeah, straddles and strangles, it's very passive, and you luckily like you don't have to be right with TA. You just kind of have to know the Greeks. Let's look at some bonds. Yeah, bonds pulling back just like we expected. I'm looking for this 92 level to hold. I'm gonna set an alert here actually. I don't trade China stocks for that reason. I trade the yen more, and I don't know how much they move with the yen. I haven't done any research with that, but yeah, Baba just looks like ass. It looks very similar to like K-Web. It just can't catch a bid to save its life. Every time it pops up, it just gets pulled back down. Came popped up in December, and it's just gotten destroyed here in January. Oil is actually like a lot of these energy stocks are just getting crushed too, which Casper and I were mentioning on a couple weeks ago, last Sunday. This APA, this one's damn near at one of our targets at $30, and that's gonna break down. This is a stage three base right here, and you can just see this is definitely stage three. You can see these heavy wicks for not heavy wicks, but heavy sell spikes all throughout this. And then if you look here, so this is your stage one, stage two. It didn't even really have a stage one, but you can consider this a stage one right here. I'll map it out. You can consider like kind of like that a stage one until it breaks like this type of high. Not really great, but stage two all through here. And then stage three, this whole section right here. This is a stage three top. That is a wonderful stage three top. Go look at any fucking stock. I'll show you. Intel. That was a wonderful stage three top. That was a very long stage three top. Stage three top right here. Boom, 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 boom. Broke down. End phase. Stage three top. Boom. Breakdown. JKS. And these look identical. These look very similar. These were a lot longer than some of these oil ones are now, but they have these toppy kind of patterns. I think Oxy already broke down from its. Nope, it's still working its way. This looks like a top. This looks like a top for sure. And that doesn't mean that it's gonna happen right away, but they are looking toppy. These oil's looking like it wants lower. That's like XOM. I don't watch this one that much, very much anymore. Yeah, the XOM is looking kind of like a stage three. It's starting to form lower lows or lower highs. CVX is the other one that's really popular. I have some TA on this because it's tried. Yeah, notice these sell spikes here. Oh yeah, one thing I did want to do today as well is I wanted to go over Goldman Sachs freaking earnings because I am gonna go over earnings as we move into earnings seasons. We have bank earnings this week. We got Tesla and Netflix earnings next week. and then we're gonna start mega tech earnings. So I am gonna go over earnings as we go, as we have them, and as we learn them to help also see like what we're looking for with earnings. So one thing that we are looking for is the main thing is your revenue and your growth. And so right here you have a surprise of 51%, which is very good. A surprise of uh a surprise of 4%, which is very good. One thing that TradingView does not do is show you your year over year or quarter over quarter um growth. Well, since they are banks, I'm not really looking too much for quarter over quarter growth because they're not really growth stocks. One second. Yes. But since banks are not growth stocks, I'm not really looking too much for quarter over quarter. I'm more looking for year over year growth, which this one had phenomenal year over year growth. So where's Q? Oh, this doesn't even have it yet. Stupid. Hold on, let me go to deep view. I don't like looking at TradingView for fundamentals. That's one thing that I don't usually actually do. I look at I use deep view for my fundamentals. And so let me get to this real quick. Change my screen. Yeah, DEPVUE. That's what I use for my fundamentals when I look at them. It's got the same trading view integration with your layout. It literally has the same, everything is trading view, but it has a lot more. So if you look here, let me move some of this shit. You have market cap, you have what sector it's in, the industry group rank, the volume, you have up down ratio, you have a relative strength. One second, my wife's calling me. I think she's just getting off work. I think her work closed down early. Sorry. Yeah, she's closing in early. There's a lot of snow here. So one thing it does is it shows the year over year, so you don't actually have to do the year over year earnings yourself. And that's really one of the main things I look for when I'm doing earnings and when I'm looking at fundamentals. I'm looking for the year over year and quarter over quarter for growth stocks specifically for the specific quarter versus another quarter. So if you look here, we're on Q4 2023. We we had 28.46 billion revenue reported, and last time this year, Q4 2022, 10.56. We're up 156% for sales, and then we're up 65% for year over year for EPS growth. And that's phenomenal. That's things you see in things like CrowdStrike and shit like that. And then Morgan Stanley also had earnings today. And so you'll see the difference in how much the growth and like the difference in earnings. I think and the reaction of the stock. I think Goldman Sachs had better earnings. You see, they had 96% year over year growth for their sales, which was a little less than Goldman Sachs, and they had they had minus 13% growth so they actually lost when it comes to EPS, and therefore their stock was down 4%. When you see Goldman Sachs stock, I don't think it was up, but it was flat. So you see the one with the better earnings obviously was better. They don't have the greatest like guidance. What's up, babies? Especially Morgan Stanley. No, babies. Issa and Ellie are sleeping. Yeah, we have more earnings. Actually, what did IBKR Interactive Brokers do? They have yes, baby, that's fine. Yeah, they did okay. 100, 115% for your quarter year over year growth, 16% for revenue, 16% for EPS growth, and they have a decent Interactive Brokers is um one of the only companies that allows they do really good options trading outside the US. So that's a good thing that you'll see these guys might do well because of that, because you see options are doing really well lately. The weekly doesn't look great to me. You have a kind of a head and shoulders style right here. If we pivot here, but the daily looks a little better, where this could be kind of a kind of a cup and handle style, a cup and handle base. So we'll see which one we'll actually want to play out. It'll really depend on the market more than anything. It's got a 3.09 up down ratio. That's fucking incredible. That's you got three times the amount of up days on high volume than you have down days. That's what the up down volume ratio is. I always look for stocks I want them to have at least 1.0 for my up down ratio when I am getting into stocks, especially for swing trades. And that's kind of why Deep View is really cool. It'll have a lot of these different, um, a lot of these different aspects that you don't see on your normal trading view. Kind of, your daily closing range, weekly closing range. What percent of the range of the daily range did it close in today? Weekly range did it close in today? A lot of these RS RS ratings. So like if it has a 54 RS rating and a 12, and then it has a 54 in the 3 month and it has a 77, now you're knowing that you're seeing some sort of sector rotation into this stock and or sector, and I'll look for that a lot of times too. And so there's not a lot of stocks that I'm looking at to go long or really trade a lot of. I'm more just kind of waiting. I've been trading UJ more than anything. So I'm really waiting and just trying to be patient for the end of this month, see what happens. We have FOMC next week. Is it next week? That's what I was going to look at. Yes, FOMC on the 31st. So not next week, but the week after. FOMC on the 31st and the 1st. It's a 2-day FOMC, and then we start February. So, and then we got CPI and PPI coming up for that as well, and NFP and all that new month type stuff. So that's what we got going. Look for February kind of being more of a weak month, and I'm thinking more of a continuation in UJ, continuation in DXY, looking for it to at least come up to the 104.30, and looking for more of a consolidation and or pullback in Nasdaq. So until then, we'll see what happens. Stocks are starting to not really hold up fantastic. Some of them are starting to roll over, so we'll see if they can hold up or if they're just gonna continue to roll over. Real quick, Microsoft closed on its highs, but I'm not liking a lot of these closing handles. CS, yeah, they're very low range, kind of toppy. They're like gapping, but not doing a lot intraday. I don't like that type. I don't like that style. Yeah, look at all these down moves too. Tesla, Tesla just got destroyed. Apple's Apple's trying to bounce here. This actually needs more time, but this could be okay if it can hold here. Good idea. Good idea. Yeah, I wouldn't short until it takes out that high for UJ, personally. Let it take out that I know you're looking at my deep view, but that's okay. I wouldn't short it until it takes out that specific like 1047, 147.46 high, because until then that's my draw. Take out that high, and then you might see a move back down to 146.50 and look for a move, look for it to retrace there. And then if it does, watch for it come right back up. Because then it's just another lower, another higher low. At the highest high in that range. I would just do this one right here. Yeah, 147.51. Right, y'all. If there's no other questions, oh wait, I want to look at USDT real quick. USDT.D. Is this still doing the same thing that we've been looking at? I want to. Been talking about this for a minute. It's 200 EMA on the 4 hours, dicking it around. I like that previous weekly candle on USDT.D. This undercut and pop back. This is nice. It's gonna if we can hold that low this specific week and form a and break out from 6.14, it'll come back to this level right here, 6.68. Yeah, this is crypto. This will make Bitcoin go down. This go up, Bitcoin go down. This is the same thing. I've been talking about this. I've been talking about this for about a month now too. Ooh, COP. Yeah, I'll look at it real quick. Nope. Yeah, this actually looks like it's breaking down. Low. We'll just do a 30 week. The weekly moving averages I use are 30 and 40. How you find stage 4? Um, if it is below, essentially, well, like this one honestly looks like it's going into stage 4 right now. Stage 4 is when it breaks down from essentially like a head and shoulders base, like a huge reversal pattern on the weekly. Has to be below its 200-day moving average, has to be below its 150-day moving average. All your moving averages has to be pointing to the downside. Um, I can go deeper into that. That's a huge thing. It's a Stan Weinstein and Wyckoff, kind of Wyckoff, but I use more of Stan Weinstein style. They created the market structure: stage 1 accumulation, stage 2 markup, stage 3 distribution, and then stage 4 decline. And so this actually could be starting a stage 4 decline right here by breaking this. It's below its 200-day moving average. It's kind of breaking down from this little mini head and shoulders at 6 months or so. And that could bring it to this low or this low right here, because now this has created a lower high here. Your easiest ones to really look at is like if you look at QQQ, that was a really clean stage analysis. And the easiest way to do it really is just your 200-day moving average or your 40-week moving average. They're the same thing. You're above your 200 week. So like COVID kind of fucked it up. Like COVID, this would be a stage 1 essentially. Stage 2 all through here. Stage 3, and then once it broke this low right here, you're starting your stage 4. You could say even this low, depending on how early you want to get in. And then like it came up, it retested its 200 EMA, rejected its 200 EMA. Then once it's below that 200 and starts rejecting, now you're in a stage 4. Come back up, now you're in a stage 1, making equal lows. And now once you're above your 200 EMA on the daily, now you're in a stage 2 again. So like right now we're in a stage 2 on the Nasdaq. So just type in MA or EMA, and then all you got to do is do your input. So right here, EMA works or MA, doesn't matter. And then just put length and put 21 and 10, and then turn off this just like offset zero. And I sometimes it has like a smoothing is that's zero as well. Stage two is markup. Oh, here I'll post a thing for it. Yes, ma'am. Here I'll post this. Copy image. There you go. So I posted that in the Playbit Square, and I'll post that with the recap as well. Did I stop streaming? It says. Yeah, I keep that posted up. No, I think we're still very early in stage two on Nasdaq. We are, I think we're roughly at stage 2.2. Yeah, yeah, I still have a bull mindset. I just think we're pulling back. I think we could do something like this, like July, August, July, August, September, where we just kind of go side, just kind of go up, or just kind of go down, but at a reasonable pace, and then eventually, and then we meet our 200. We might even come down back down to this 200 day, and then come back up. But yeah, if I am bullish for the year, I think we will close the year in the green. I think we'll close the year above five. Um, if we are red, I think we would we're gonna close above -4, -5% for the year if we are red for the year. So I do have a bullish mindset for this year until I see otherwise, and that's just as of right now. I mean, it can change in a freaking heartbeat.